Alright, so how do we make sense of this chart? Well, first let's see it broken down. This blue is for year to year. So you got the beginning of 2022, at the end of 2022, the beginning of 2023, and then over here will be, right over here will be the end of 2023. So there'll be a blue line here at the end of the year. So what can we do? Well, we can basically, just real quick, let me throw these lines on there. Okay, so here we have yearly open price 2023, extended to January 1st down there, and then we have the 2023, first quarter open, second quarter open, and this is supposed to be, did I make a third quarter open? My bad. Let me do this real quick. That's supposed to, I thought I already had this done before the video, but that's cool. You can see how I do. Let me borrow good night. I just feel like I shouldn't have to type it again, but I had it copied. Hopefully you following what I'm doing. If not, because I'm trying to get done just quick. Third, because I'm making this video, I don't want it to be too long for no reason. But anyways, there we go. So we got first quarter open, second quarter open, third quarter open, and fourth quarter open. Yeah, so that's, I don't have like a lot of this. Like, I have spent a lot of time on like other charts. Like, if you probably, like, if you go to this one, I probably have like, might have more stuff on there. See, I broke down all this the years and everything. But I haven't, like, I got to come over here and organize all this stuff. And that's what started this. The reason I'm making this video is because I got everything organized. And when you do that, it's just so great. And you can see things. And that's what I want to show you. So, the yearly open price, and just a really unbelievable year, just a magnanimous year. Now, we didn't make a new high this year. I'm not going to pretend to know. Actually, I might pretend to know what's going to happen, but there's a limit. Obviously, I'm not going to make something up. Obviously, if I'm not sure, I'm going to say I'm not sure. So, real quick, let's go to simplify this. I didn't draw this level in yet, but I don't want to forget to do it later. So, I know I'm like taking up a little bit of video time on some of this stuff, but you can also see a little bit how I organize and stuff. Like, I've got my inversion levels right here. But yeah, definitely want to note. And I know I just called it simply an inversion level. I could say 2022 high, or more specifically, this would be like this one would be third quarter. Let's see, August 1st would be third quarter high. So I could say something like if I wanted to be more precise about the description, I could say 2022 second quarter high or something like that. And just leave it in the neutral blue because you know, it's an inversion level. Basically, it's just a high and a low. It can become support and resistance and all that stuff. So I typically just have them labeled inversion levels, but you know, really when they're this major, you know, I don't know, maybe you could label certain ones, I guess. Anyway, let me move on. Where's that? Is that one inside there? Okay, cool. Hide those for now. Yeah. Okay, let me zoom in. Let me, I do not want to accidentally enter a trade right now because I'm not trading. So that would not be good. Probably, most likely. I don't know. It actually would I'd probably get better results just doing that on accident than I would on purpose. But I'm a little bit ADD, so I'm a little bit all over the place. I do apologize, but anyway, yeah. So first quarter started low, went up. Second quarter it kind of dipped down a little bit and then went up. Third quarter it went up a little bit and then came down and went back up and came back down. This here fourth quarter yearly open, as you can see, we dipped down. Okay, first we dipped up, so there's some ambiguity about that. Is just something that, well, it is kind of like the ICT Power 3 basically, but you know, that even that does have some ambiguity. I'm not an expert on that, but I don't know. Is it reasonable to assume? What can you say? You could say different things. You could say, well, it's probably, and I would say, yeah, it probably will see a reaction here, and that's the reason I'm making this video. I'm going to take these lines off just so it's not so busy, but I wanted to have these on there while I showed you the levels. You can see what it is. Basically, we have year to year, quarter, yearly quarter. I don't break down the months into quarters necessarily. I just don't know. I just think it's too much. But anyway, yeah. So then you have that's what those red lines separate the yearly quarters, and then you have monthly separated by the orange, which these are also colored orange, and then you have the yellow, which is the monthly opening price, which I also have in yellow on the levels. I hope that makes sense. If it doesn't, just try to keep up. But we're gonna go down to the 4 hour, and we can start to zoom in. These are the only monthly levels that I've drawn so far, but you know, if you notice how it does, it dips down and goes up, right? So I always talk about first quarter, first half. It'll dip up or down and then usually go the opposite direction. This one, it did not go above it, but it was already so high. And if we start looking at things like levels, which we're going to talk about in a minute, you can see what happened. So it clearly bounced off this 16,000 level and headed down to the 15,000. Kind of, you know, dipped down below there and back up to this 15,500 level. It kind of popped up above it a little bit, but these levels are really the levels that it was attacking. You know, you can't think of them like a brick wall, you know, or a bouncing a basketball on a basketball court or a driveway or whatever. You have to think of them more like a trampoline. This being the level of the trampoline, and then obviously the trampoline, it goes below it. But the level that it was attacking is not really these levels down here. It's this level right here, because these are the major. This was a major level, and that was the level it was attacking, and bounced up off to this other mid-level. The color coding should help you understand the strength. The red is stronger, and you have the orange, the next strongest, and then the yellow would be slightly less strong. So the red is the strongest, orange slightly less strong, the yellow slightly less strong, and the white being slightly less strong. And then sometimes, not all the time, but sometimes I do have like these levels on here, but honestly it's a little busy. I mean, I'm already on the 4-hour chart, and it's a little ridiculous. I mean, maybe if you're trading on the 1 minute, which I do, and I just said do, but it's a little too much. You don't really need all that. Look at, I was slammed through the liquidity there, huh? But anyways, that's the levels. But I'm not trying to talk about those yet. I just wanted to say, that would explain why, that turned around. That's what's going on up there. And so what I'm trying to say is, it's bouncing off that level, and so that's the reason why when the month opened, it didn't go back up there, because it had already tested that level. Didn't like it. It's too high. That price is too high, overpriced. Stocks and on the NASDAQ. And so it comes back down. This is still too high. Too high of a price. It gets a reality check down here. The bubble burst. And gets a correction. Got a correction there. Down to where? Well, don't forget to put your big levels on there. Down to there. So really, price is bouncing around on these levels, on a bigger sense of time, as you could say. If you go to the daily, you can see price bouncing around these major levels on the daily. You got Head and Shoulders bottom. I am an ICT student, but I do say that you do see some retail ideas, or some really their fundamental market analysis type stuff. Head and Shoulders down here, kind of a little Head and Shoulders type thing right here, another little Head and Shoulders type thing right here. But you don't want to ignore what is useful. You want to use what is useful. Look at this, another Head and Shoulders right here. Boom, and it goes down. What is sort of interesting, but you have to remember, a Head and Shoulders is only valid. In other words, this was going up, 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 and you might have thought, you know, that for example, this was going to be a Head and Shoulders, okay, but it never broke this neckline right here, okay, and once it broke, if you were to draw a trend line from basically here, you know, you can kind of see there is kind of something to it in a way, but you also have these other levels as well. And then when you put in, you could see that is a 14,500 level, which is also a valid level, but it was also a rejection level here, another one here, and then that trend line up there. So it's a confluence of things. You know, the most significant levels are obviously these levels, but on this scale it would be the red is the most significant, and then the orange would be slightly less, one step down from that. So you had a bounce off of this huge bounce, you know, but I like ICT, and he's my homeboy, and that's my dog, you know what I'm saying? That's my nigga right there. Like that's you know what I'm saying, that's my mentor, right? I never met him and stuff, but I consider him to be, you know, like my mentor, the only mentor I ever had. And but you know, I can't deny what I see, and I see sometimes, you know, retail stuff, sometimes it looks to me like it plays out. Like the only thing, you know, it's interesting though to look. So now we are on the daily, but look, you got a double bottom right here, boom, and it went up, and it made a double top, and then boom, it went down, you know, and stuff like that. But you can't be having confirmation bias. Well, I would say to say, well, I want to believe in retail, so therefore I'm going to look for every time it worked, every time retail worked, and I'm not going to look at the times when it did not work, right? So you can't be like that. You have to look at all of it. You got to be looking for times it worked, times it did not work, if you can find them, which I know you can. There is definitely something to the idea of retail traders trading double tops and selling, and then you know, whatever institutions or something comes over and takes that liquidity. That does happen a lot. I would say more on the smaller time frames. To me, it seems like the larger time frames are the ones that you see the quote unquote retail logic, or like the classic trading logic, like something that you would read in like you know, Technical Analysis of Financial Markets, or that stock trading book, what's it called, Stock Analysis or whatever, Technical Analysis of Stock Markets or whatever it is. You see those concepts working, I think, more on like higher time frames. You know, you do have kind of a little double top here, kind of a double top formation here, kind of a double bottom here. But I'm not teaching a trading course. The reason that I'm making this video is to show you the levels that I have in the chart, and how these quarter levels are just continually respected over and over and over, to like just such precision. I mean, it's amazing. You say, well, you know, but it went up a little bit more and it went down a little bit more and it violated the level and stuff like that. Well, they're, you know, a lot of times they're just wicks, depending on what time frame you're looking at. If you're looking at like the daily or something, you have to make sure you're looking at the right time frame to kind of make sense, a little bit, sometimes more sense of it. You have to, you know, it's great Honestly, I think being quote unquote ADD, as they say, is amazing for trading sometimes, because you can be flexible in your analysis and your understanding and everything like that. You can kind of jump around and sort of, your mind, or my mind rather. But if you have a mind like mine, then your mind, sort of takes all these at once, and it kind of makes sense of it, kind of paints the picture, puts the puzzle together, what have you. So you might say, well, why are you not trading right now? It looks like the market's moving, and well, dude, I decided NASDAQ, I'm only trading between 9:30 and 2:30. 9:30 a.m. and 2:30 a.m. because it's just too slow. Dude, come on. Look at how slow this is. Ridiculous. This was yesterday's move. And look. Only an idiot trades Asian session. Okay? Only an idiot. It's just like I'm not saying you can't make money if you're highly leveraged. Basically, I would have to trade the NQ E-mini, but I right now I'm trading the micro. Alright, but anyway, let's get back to what we're saying. Yeah, I just want to point out the levels that I have on here. July, August, September, October, November. I know I have just like one little Sunday opening price there, and that's like it. But the Sunday opening price is important. I just haven't done as much charting on this one as I have on this one. I need to organize this one. I do not have it organized at all. As you can see, it's a giant mess. But I'm not gonna bother you with that here. Yeah, I gotta organize this stuff, dude, so I'll do that later. I probably should be doing that right now, but that process is just the best thing you could do for your own sanity. Yeah, so anyway, but I just want to show you the levels that I have. I know that you're like, well, what are these levels? I don't understand. Well, they're just quarters theory levels, and they're just different scales. You have these different scales. So I'm actually getting ready I'm gonna make a better video. I'll probably upload both of these, but the next one's gonna be really short because it's like midnight, and I got like, I got like a life. I got stuff to do. So, all right.